Hey Teddy, what's going on, man?
Hey, Noah, how you doing? Thanks for having me.
Doing good. I'm glad to have you on today.
Yeah, it's great to be here. I think
Right on. So, good.
I was just gonna say, I think like a lot of people on Twitter, I think I came down with a little cold from after ETH Denver. Uh,
Hey, man. East Denver sounds like it was a great time. A lot of people, but it also sounds like a potential super spreader.
yeah, yeah, basically. Uh, yeah. Did you go?
I did not go. I feel like everyone went except for me, but we'll try to be there next year.
Nice. Yeah, you should check it out.
Well, look, Teddy, before we get started, do you want to give our audience a quick background into who you are, your origin story, your career trajectory, and then how you ultimately ended up making that leap into Web3?
Yeah, sure, man. So my background is actually I started my career as an interest rate swap trader. I worked at Barclays Investment Bank. Yeah, I did that for about 3.5 years, and and like there were parts about that job that I actually, looking back on it, I actually really liked. There's a lot like being a trader is really fun in a lot of ways, but like working at a bank is very not fun. So I did not like that part, and I really, I wanted something sort of new and exciting, and you know, and then kind of 2017 happened, and like crypto was just going through the roof, and it really sort of caught my eye, and it seemed to me like like it was like I don't know, it just seemed really exciting and really cool, and like I thought that because it was sort of financial in nature, like I thought that my existing skill set like would apply, and so I got into crypto in 2018. Uh, as a trader, I worked for like a family office who was big into crypto at that time, and I was their crypto guy. And then later in like 2019, I saw DeFi really taking off. Uh, and it was sort of like that was before DeFi summer, but there was still Compound and MakerDAO and Uniswap, and I thought that kind of the next sort of logical step for DeFi was going to be the ability to lend and borrow at fixed rates of interest. So I thought that like DeFi was going to be big, and that fixed rate lending was going to be just a huge opportunity. And so basically, I started the company with my partner Jeff in January of 2020, and now we're here.
Beautiful, man. Quite the story. And we're glad you're here. I think we need more fixed lending protocols, but I'm not going to steal your thunder. I want you to break it down for us. What is notional finance? And then we can kind of jump into nuts and bolts from there.
Yeah. So Notional is a fixed rate borrowing and lending protocol on Ethereum. So it's like Compound and Aave that you guys are familiar with, but the difference is that on Notional you can lock in a rate of interest for borrowing and for lending. So today we have about $50 million in TVL, and to date we've done about $700 million, I think over $700 million of loan originations. So we've gotten like I would say pretty good traction, and really like the reason people use Notional is just that they want sort of the stability, and just like they want to be able to like lock in their return or lock in their borrowing cost as a borrower. And they've sort of been, a lot of people are frustrated with the rates in DeFi. You think you're getting 7% one day, and then you come back and it's gone down to 1%. And I think that was a really common experience that a lot of people had in DeFi, and so they like the ability to get a fixed rate of return. So that's what Notional offers.
Right on. So fixed rate of return, you get that by locking in your ETH. What are you borrowing? What do you guys allow folks to borrow?
Yeah, so you can. So right now, we have four currencies on the platform. There's ETH, Wrapped Bitcoin, USDC, and DAI, and you can lend and borrow any of those. So our interest rates right now are actually they're actually really high for ETH. So we have rates over 6% right now. So you can lock in a rate that's like one or maybe 2% higher than the ETH staking rate on Notional today, and like that's really good because like so you can get a guaranteed rate, and you also don't have to worry about the staked ETH peg risk. So if there's like a depeg event, like you don't have any exposure to that. So we think that that's like a pretty good opportunity for people right now. But you can also lend and borrow stablecoins, and our stablecoin rates are also pretty good. So right now, I think USDC and DAI is about 4%, which is a lot higher than you're going to get on Compound or Aave, and it's a fixed rate. Yeah.
Mm-hmm. And you guys also allow folks to leverage, is that right?
Yep. So that's like a new product we actually recently launched. That's called leveraged vaults. So that's a really good product, and it's why our ETH rates are so high. So this is like more of like a sophisticated or like an advanced product. But basically, like what it does is it allows you to borrow ETH from Notional at a fixed rate, and then use that ETH um, in a DeFi yield strategy. So let me just like the easiest way. So basically, what's happening is that the DeFi yield strategy is itself collateral against your debt. Okay, so uh, the easiest way to like explain this is with an example. So let's say um, you have 10 ETH. You can bring 10 ETH to Notional and borrow like 50 ETH. So you have 60 ETH in total. And then you can take 60 ETH and put them in the vault and execute that yield strategy with 60 ETH. So like what this yield strategy does today is it takes your ETH, puts it in the wrap staked ETH LP pool on Balancer, then takes those LP tokens and stakes them on Aura, and then harvests all the incentives and reinvest them into the strategy. And right now, that strategy yields around 7%. And so basically, like you're earning 7% on the strategy plus like um, you're earning 7% on 60 ETH, and you're paying Notional's borrowing cost on 50 ETH. So basically, the lower the borrowing cost is on Notional, or the higher the strategy return, like the more money you're making. And so what's happened is that it's caused people to like borrow at really high rates on Notional, because you can borrow on Notional to directly go do the strategy that's earning 7%, and Notional does everything, right? So uh, we like you can get into this position in one click. So you just click once, decide that you want to do it, and then Notional is going to go take your capital and execute that strategy, do all the reinvestments, do everything. So that's been like a really big product. Yeah.
I appreciate the example, especially for someone like myself who's a visual learner, or rather, it helps me learn by example. I see that it says
Yeah.
beta.notional.finance. You guys are still technically in beta, and if so, what does the alpha version of Notional look like to you?
Wait. Yeah. So the leverage vault product is still technically in beta, and that's really just like we're working on updating the UI. So basically, we launched it before like the UI was like super crisp, and we've gotten a lot of feedback, and we're making a lot of changes, and we just haven't like yet been able to like push all those changes. So we expect to take the product out of beta later this month. Yeah. And then sort of for your other question, well, when you say like the alpha version of Notional, what do you mean by that?
Well, I guess I probably made a mistake here, because since I have a bunch of your tabs open and I was looking at the URL that says
Yeah.
beta.notional.finance, and I assumed that the entire protocol was still technically in beta. And so the question was, what does the alpha version of Notional look like to you? But you kind of cleared that up by saying, hey, only part of it is in beta, and this part of it's actually fully live.
Yes, that's right. That's right. So it's only the leveraged vaults product that is currently in beta. Everything else is, fully live. Yeah.
Got it. Okay. And so I'd read that there's a liquidation infrastructure that makes sure borrowers don't become insolvent. And if they do, the protocol shields users from any losses with reserve funds.
Yeah.
Can you explain a bit how that works, and also if there's any sort of subscription fee to attain this?
Yeah. So that's like okay. So basically, like the way Notional works. So everything is over collateralized. Whenever a borrower borrows money, they are posting collateral to Notional that is worth more than the money they're borrowing, right? So this is going to be very familiar to most people who've heard of compound Rave. It's the same mechanism. So on Notional, if you want to borrow USDC against ETH, you have to put up, $150 of ETH to borrow $100 of USDC. And basically, if the value of your collateral drops below a minimum threshold, you can be liquidated. And it is that liquidation which makes it safe for lenders, and makes sure that borrowers don't become insolvent. So basically, Notional. So those liquidations are open to anyone. Anybody can do that. But Notional, just like to be safe, we run liquidation infrastructure ourselves. So we don't have the protocol doesn't give us any special treatment. We don't have any special access. But just like in order to be sure that somebody is doing it, we run automated bots that will go liquidate anybody. Yeah, so that's how liquidation works in Notional. There's also liquidation for leveraged vaults. And it's basically the exact same principle. So like in the example I gave previously, where you're borrowing ETH to go LP into the wrap staked ETH pool on Balancer, if the staked ETH price depegs, then the value of those LP tokens will decline, and they can be liquidated to pay off your debt. Now, Notional also runs liquidation infrastructure that's going to check and do that if that opportunity ever arises. So yeah, because we just like natively run liquidation infrastructure for everything that we list on Notional. Although it's not, it's a public function call, so anybody can do it, but we just do it ourselves to make sure that somebody's doing it.
Okay, got it. And you gave examples of Aave and Compound, pretty straightforward. I mean, for the newbie investor, or I guess leverager, you collateralize you stake your Bitcoin or your ETH. It's over collateralized. You borrow against that asset, and you do what you want with that asset. Some people buy more ETH and loop it. Some people go and buy other assets. Some people just use that cash to live off of because they're bullish on the asset they're collateralizing. But the picture that you painted for me earlier with the kind of locking in 10 ETH and then borrowing 60, and you start to paint out some more advanced yield farming, staking, borrowing, loaning strategies. And this seems to not be super newbie friendly. So for folks that are interested in kind of, one, the example that you painted out, and two, getting better at applying some of these strategies, do you guys have any documentation or tutorials or guides to help younger traders on board?
Yeah, we do. So we have documentation for these leverage vaults linked in the UI, and I can give you some links to that documentation as well if you want. But I think you're absolutely right. These leverage vaults are definitely more like sophisticated tools. That there's like a lot of moving parts. So it's not super simple to get your head around right at the beginning, but they're like very, very powerful. And so what we've seen is like, the people that use these tend to be, pretty sort of seasoned, grizzled kind of DeFi natives. Um, so it's definitely like, all the information that you need to figure out how to use them, like it's all there. But yes, it is not as simple as, just like lending your ETH. And that's the cool thing, I think, because like basically the way it works is that like, if you want to dive in and like figure it all out and like, go do it, you can. And a lot of people do. And then that pushes up the interest rates. And then it means that like if you're a lender and you don't want to go, figure out how that all works and like take the risk and do all this and that, you can just lend and like earn the high interest that like the leverage vault users are paying. So I think it's like a nice, yeah, it's like a nice thing.
Yeah, I'd agree. I mean, going through this and learning more about the different services and features you guys offer excites me. I get particularly excited when I see a 6.54 fixed APY for not borrowing, but lending ETH. So I would imagine that other people that are long-term ETH holders and see that see that return are going to get excited and maybe stake their ETH into the protocol. Would love to know what security measures you guys have, because there's always that fear that hey, the protocol might get hacked. I could lose my ETH, or I mean, you already highlighted what would happen if there was like a SC depegging, but yeah, I just want to know one, how you guys, what your security is like, and then two, if there was an instance of a hack and funds being drained, if you guys have enough reserves to make those victims whole.
Yeah. So, yeah, okay. So there's two basic risks when you use Notional. Like, so if you want to like go earn that yield, you're basically taking two risks. The first risk is like what we call economic risk. And that's the risk that like you were referring to, if there's a stake peg and borrowers become insolvent, then you as a lender could get hit, right? Now, we have there's like, a lot in Notional and like that makes that risk pretty small. So, like I talked about earlier, we have our liquidation infrastructure up and running 24/7. Liquidations are open to anyone. Uh, uh, so that means that you're not reliant on our liquidation infrastructure exclusively. And then also, even if a liquidation does occur, like we've set our risk parameters very conservatively so that we can be sure that the protocol can remain solvent, even if we see a move in staked ETH that's as bad as any move in a 24-hour period that staked ETH has ever had. Right. So like we set things very conservatively so that even in the worst case, we're okay and lenders don't get hit. So that's like on the economic risk side. Then the other risk that you're taking is smart contract risk or like hacking risk. Um, and, basically like, we do everything we can to minimize that risk and mitigate it as much as possible. So that's like, we've done, close to 10 audits at this point. We've done audits with Open Zeppelin, Certora, ABDK, Consensus, Code Arena, Sherlock. We've done multiple audits with Code Arena, multiple audits with Sherlock. So we've like put a lot of time and effort into the security of the code. And then in addition to that, we have a 500K bug bounty live on Immunify. So if anyone has like a critical bug, we'll pay them 500K to disclose it to us, and then we can patch the vulnerability and our users don't get hurt. So we do, we take that very, very seriously, and we use all the tools at our disposal to make sure that our code is as secure as possible. Yeah. Oh, right. And then, sorry, the last thing is like, okay, so if there is any loss, like whether it's from an economic risk event or a smart contract hack, uh, that's what we call a collateral shortfall. And we have a staked note like liquidity pool that sits on chain and can be taken from to replenish the reserves on the protocol in the event that there is any sort of like collateral shortfall. So right now that liquidity pool holds about $3 million, and up to 50% of that can be used to recapitalize Notional in the event of like a hack or some economic risk event. So that's like the last line of defense. But yeah, we do have that as well.
Yeah, and just to clarify, this is all for people that might just be tuning in. This is all speculative. Teddy, if I'm not mistaken, you guys have been around for relative in crypto terms a long time. And have you guys ever had an incident like this, or is it you guys been clean ever since your inception?
Yeah, so we've never had a hack. We have had uh, vulnerabilities been reported through ImmuneFi. So we actually like we paid out, we paid out like $1 million. This happened in very shortly after Notional V2 went live. This happened, I believe, maybe a year ago, over a year ago now. But we paid, we got in a bug report through Immunify, and it was a critical bug, and we paid the guy $1 million. Um, so actually, we even tipped the guy. We gave him some note tokens too. But yeah, so this we've never had like any funds lost, but we have had like a vulnerability of that sort, and we paid up. So I think that's like that's what it's sort of like it's scary, and it was scary, but it's also it's something where it just in DeFi, these things, like if you look at the history of any protocol, um, almost all protocols, unless they're forks, like have had some issue, whether that's like a bug report like this, or like a like a live hack. Um, and I think it's actually like it's just something that you try as a team. You do everything you possibly can to make sure it doesn't happen. But then if it does, you just have to handle it as best you can, and make sure to pay the guy that tells you, and like I think it's important. And then you build yourself a reputation, and then other people come in the future, and if you have any other issues, they know that you're a guy who does pay out. So I think it's like a good, you know it's important to do that. Yeah.
Yeah, $1 million, quite the reward. I'm assuming it was a significant enough bug that warranted such a just like a compensation.
Yep. Yep. It is a critical bug. Yep.
That's awesome. So the Note token, can you tell us a bit about that, its utilities with respect to the protocol and to tokenomics?
Yeah. So basically, like the node token is a governance token for the protocol, um, and it's kind of its current role in the Notional ecosystem. So first of all, it's governance, and then it's also like there's like a staking module uh, where you can bring your note and ETH and stake into an 80/20 note ETH balancer LP pool. And if you do that, like, so that staking pool is like the insurance pool for the protocol that I was just talking about a little bit ago. Um, so you are taking the risk, you're staking your note, you're taking the risk that it can be seized to use to recapitalize the protocol. Uh, but in exchange for that, you're getting a return on your note, because basically there's like periodic buybacks of note. So uh, the way it works is that Notional, because we're integrated with Compound, we earn comp incentives. So the way it works today is that all the comp incentives that Notional protocol earns are used to buy back note, and then that note that is bought back is given to the note stakers. So I think the current APY for note holders or for note stakers is something like 17 to 20%.
Nice. And this correlates to this links to the the provide liquidity tab where it says provide ETH, for example, 8.24 APY, and then it shows variable yield, and it also shows a note incentive yield as well.
Yeah, that's correct. So note is also used as liquidity incentives for liquidity providers on Notional. So there's a note staking module whereby note holders can earn returns, and then note is also used as liquidity incentives.
Beautiful. So I think that covers most of my questions. I tried to keep things high level. I don't know, Teddy, if there's anything you think I missed or you think it's important for us to highlight and discuss, go ahead and mention it now.
No, I don't think so. I mean, I think this is pretty good. The only other thing I'd mention is that we're actually approaching the launch of Notional V3. So we just locked in a time with our auditors for the end of this month, and we're hoping to have Notional V3 live towards the end of the next quarter. So maybe roughly 3 months from now. And Notional V3 is going to be a massive step forward. The details aren't totally public yet, but what I can tell you is that it's going to provide like even more opportunities to earn yield. You're going to be able to get like higher yields with Notional V3. So that's coming, and then also we're launching a stablecoin leverage vault within the next few weeks, and that's going to be awesome. So you're going to be able to earn really high yields on stablecoins using the leverage vaults, or just lending on Notional. You're going to be able to earn high yields doing that too. So we got a lot coming.
Awesome. I'm already thinking of some strategies. I like stablecoin yield farming strategies, especially in a bear market. It's a bit safer for my taste.
Yeah, for sure.
Teddy, I mean, I think we covered everything. I don't know if anyone in the audience wants to come up and ask any questions. We had some great questions earlier today on our other AMAs, but are you working on any other projects?
Nope, just Notional full time.
Beautiful. Well, look, I really appreciate your time, Teddy. I know you're not feeling all that great, so I'm not going to keep you longer than I have to.
Thank you. I appreciate that.
Yeah. I hope you recover well, and don't be surprised if you find me in your DMs asking about different potential different strategies that I could deploy with Notional. Because really, the way you broke things down and the way that after looking through your website and looking at a protocol and looking at all the different things that you offer, I am very intrigued by, especially those fixed APYs on assets like Ethereum.
Yeah, cool, man. All right, well, yeah. So, if you do have questions, let me know. I'm happy to answer. And then, again, thanks for having me on. And I'll rest up and try and get better.
All right, Teddy. Well, I really appreciate your time. Whalecoin Talk community, thank you for joining today. That was the third AMA of the afternoon. We have one more coming up. I believe it's 11 p.m. UTC. So stay tuned for that. And remember, everything you hear on these broadcasts is meant for educational purposes only. Nothing is financial advice. So be safe out there, everyone. And see you all on the next one. Take care.